right, let's get this thing started. Good morning, everyone. Today is Thursday, February 23rd. Hopefully, y'all are having a great Thursday morning. SPY is currently trading at $401.31. I'm feeling slightly bullish today. And if you're part of the premium Discord linked in the pinned comment, then you'll know why I'm feeling bullish. And the reason for that being is that GDP came in slightly lower than expected. So on the calendar that I have, the economic calendar, I give what the meaning is for each of the economic events. So if we go over to the economic events calendar on investing.com, you get the synopsis or like the description from them, and then you also get my take on it. So GDP for this quarter, this is a monthly revision, by the way, not the end result. The end result won't be available until next month, actually. But GDP quarter over quarter came in at 2.7% versus 2.9% expected, and this is down from 3.2% previous. So this means that the economy is starting to slow down a little bit as of the last month, which is what the Fed wants, right? We want the economy to slow down so we have less inflation. So naturally, I would have thought that Treasury yields would come down, the dollar would come down, and initially the reaction for the 10-year Treasury yield was up 3.94 to 3.98 almost, which is a new two-day high, and it's pulling back to 3.93, which I think is actually the right move. I think the move is to the downside for the yields today, which would be bullish for the markets. Mic check 1 2. Yard dog. I hope my mic is working. Yeah, it looks like it is. Yeah. Good morning, Tims. Good morning, Irfan. Good morning, Gary. Hopefully y'all are having a great Thursday. The VIX is currently down to 2164 from a high of 2363 the other day. So basically all the fundamentals are pointing us to the upside for SPY today, even with the dollar down slightly, negative 0.1% at 104.47. So this is at yesterday's highs, which would weigh negatively on the market if it does continue to go up. But currently the trajectory for the dollar index is to the downside, for VIX to the downside, and even for the 10-year Treasury rates to the downside. And lucky me, I decided to take on a bullish trade, assuming that SPY would stay above $395 with a put credit spread. And obviously that's going to work out pretty well considering that SPY is currently trading at 401, which means that it would need to drop $6 for that option to become in the money, or about 1.5%. And with the VIX trading at 2164, we'll call it 22, divide that by 16. The expected move would only be about 1.4%. So the odds of this option going back in the money and me making max loss for this trade is very low. All right. So we got that, and a trade that I actually lost on, unfortunately, was Nvidia. I took on both a put debit spread and a call credit spread. Call credit spread was assuming that it would be under 210. The put debit spread was assuming that it would go all the way down to $190. I opened that like a month ago when it was trading a lot lower than it is right now. I opened that like early January, I think. Probably around this area right here when it was trading at like 195, 200. So obviously took the wrong trade there. Didn't risk a lot, thankfully. I never do risk a ton on earnings trades because it is binary and you can be wrong. Turns out that Nvidia beat on their earnings per share, they beat on their revenue, and they increased their guidance going forward. So that's what you know as a triple beat. Again, beat on revenue, beat on earnings per share, beat on guidance. Triple play equals stock rallies a shit ton, which is exactly what you're seeing out of Nvidia currently. and it went from a price of 207.54 at close yesterday to currently 233, which I believe is up somewhere around 12%. But what we might see is if people think that Nvidia could pull back, they're going to start to sell out of their call options. The highest open interest was at 220 calls, so those people would probably be up a shit ton of money. So if they decide to take profits for their options that are expiring tomorrow, you're going to see the market makers selling out of Nvidia shares, which would end up in a pullback for Nvidia. And I could probably see this coming down to probably below this 230.62 mark. It was beat on earnings, beat on revenue, but I'm not sure if it really warrants going outside of the expected risk range at 231. But considering that the markets are up, good 0.75% or whatever today, then, that could carry Nvidia with it. Yeah, ES/ES, or the S&P futures are currently up 0.7%. So that could end up carrying the market. You got a good GDP report, and then the initial jobless claims came in slightly lower than expected, but not in a very major way. 192,000 versus 200,000 expected. The problem that I have with the jobless claims, though, is that the continuing jobless claims is back to where we saw in the beginning of February, on February 2nd. So this means that the unemployment rate is probably going to remain the same for the month of February, if not even lower than it was last month, which means that we still have a very hot labor market leading to higher inflation. So that is kind of the caveat here to this bullish sentiment. Oh, I'm not sharing my screen, just sharing my face. My bad. There we go. All right. Yeah. So this is what I'm looking at right here. This is the continuing jobless claims. So total number of people unemployed came in at 1654, which is about the same that we saw for the first month or first week of February at 1650. So not really seeing much change in unemployment, which means that the unemployment rate is probably going to be lower than expected. And another note about Nvidia earnings, they had, the beat on revenue, beat on earnings per share, but they're at the same price that they were roughly a year ago, right? They were trading at $230. And if you look at the revenue, if you look at their earnings per share, both of these are down quite substantially. So this means that they're trading at higher multiples than they were previously, even when interest rates are going up, which doesn't really make a lot of fundamental sense. Whenever interest rates are going up, discounted cash flows models will discount the future cash flow of the company, which means that the price of the stock should be trading at a lower multiple. But that's not what we're seeing. We're seeing it trading at a higher multiple than it was a year ago. If you go to their investor relations page, let's see, Nvidia investor relations, and we look at their revenue from their latest report, $6.05 billion, which is down by 21% a year ago. So a year ago, they were doing 6.05 times 1.21. They were doing $732 million or $7.32 billion in revenue. Now they're doing 6.05. And if we look at their earnings per share compared to a year ago, this is probably down substantially more because they're losing earnings power due to the going from the chip shortage to a chip oversupply, which means that they need to lower the prices of their chips in order to get them off of their shelves. But if you look at the bell just rung, so we'll have to see in a minute. But if you look at their earnings per share, came in at 334 versus 444, down 25%. So this shows that they're losing margins, even on a non-GAAP basis. On a GAAP basis, not accounting for share buybacks, employee stock compensation, this was down by 55%. more than half on a gap basis. So, not exactly a great place to be for Nvidia, but their stock is still trading high as shit. Currently at $233.80. My guess, probably going to head back below 230, but that is just my best guess after all. Yeah, they're definitely nerfed compared to last year's earnings. And if we head on over to Robinhood, I know that I'm probably down by max loss for the Nvidia trade. Let's see, 210, 212.50 call credit spread. These are going for 260. So basically, max loss for that trade. Max loss for the put debit spread that I had opened. So pretty tough day on those two. But the put credit spread that I have for SPY, assuming that it's going to be above 395, is currently going for 3 cents each. I only opened 3 of them. Could probably close at 4 cents. I'm going to probably hold that one, though. But I do want to kind of take a trade against Nvidia with the put debit spread, assuming that they'll go below 230 again. So let me see how much that would cost. Yeah. Just got a notification that I took max loss on my Nvidia trade. As if I didn't know Robinhood. Set the expiration date maybe for next week even, just to give us a little bit more time for rational investors to step in. Currently trading for $1.40 for a max profit of $110. Not a bad trade at all, actually. And then if I choose this week's expiration date, if I can find this week's expiration date, that trade is going for, oh Jesus, come on now, 130 to make 120. That's not a bad trade either. About a 1-to-1 risk reward ratio, and I'd say that's a pretty good deal. IMO. To assume that Nvidia will go back below 230. You'll probably see some profit taken this morning, and I think we're going to end in that risk range at 232 or so. So I just opened that Nvidia trade right now. I think once people start to look at the multiples, they'll get a realization that it's not as good of a trade as what they hyped it up overnight to be. Just opened a new Nvidia put debit spread expiring tomorrow, 224 at 125 each. Or I just opened one, so at 125. SPY levels for today. So I've got, let's see, for SPY, I don't have them drawn on the chart. Got one at 403.06. There's another one at 402 and some change. Let me pull up and put them on the charts. Member trades. Okay, morning analysis. All right, so resistance at 402.46. So higher than where we're at right now. $402.46. Extend this to the left. 403.06. And then for supports, we got 400, the obvious psychological number. left extension on. And then you got below that 397.02. So way down here, which was the close of yesterday. Or actually the bottom of yesterday. All right. Extend left. So those are my price levels that I'm looking at today. 400, 397, 402.46, 403.06. And going back to Nvidia, currently trading at 232. So close to that 230.62 mark, but not quite there. I only trade to make around $100 a day. That's the goal, is to make around $100 a day. The current rate is about $90 a day in February. So if we go over to the calendar, February's calendar and the log, $89 a day is what I've been making since beginning of February on average, with that 266 loss the one day that I did lose money for this month. Hoping to close these last 2 days positive, but with the 150 loss that I'm taking for Nvidia, probably might end up in the red today. But luckily it was only 150 and not, 300 like I took for this trade right here. Gave back some of the winnings from my streak of last week that hurt. Yeah, I mean, the big thing that I kind of learned from January's trading is cut losses as soon as possible and keep your trades small if you're going to hold overnight. That's what I've been focused on mostly, to where, I'll be okay with making a $9 profit, something like $9 profit, if that means I can save myself $200 in losses. So if you look at my February log, the biggest loss that I took was $270, which that trade I held for much too long. I shouldn't have held against the trend, basically. But if you look at the average loss, it's been around $74 compared to my average win, also $74. And the win rate being around 70% means that, I have positive expectancy. So as long as I can cut my losses as quick as possible, even if that means, cutting them at $10 or cutting it at a $10 profit, overall I'm going to be profitable. Is $100 a day enough? I mean, if you're doing 20 trading days a month times 100, that's $2,000 a month. Yeah. Well, yeah, everybody has a different living situation, and I also make money from the YouTube channel too, right? It's not just the trading. I can go to my income sheet and show y'all how much money that I make. So for the month of January, I made $3,000. For February so far, it's been $3,300, and been making roughly about $1,000 a week as of the start of February. So from the YouTube channel, from the Discord, and from the trading now, it's all just kind of piling up to make roughly around $4,000, which probably still isn't enough over in New York. But I'm living over in Pittsburgh, so it's a little bit cheaper here. My rent is around like $1,200. Can you paper trade option strategies on Thinkorswim? Yeah, absolutely. Let's see. I mean, with paper trading with Thinkorswim, you have to go over to the, what is it? I think there's some button that you can change. You would just have to log out, I guess. log back into the paper trading app instead of the live trading app. And yeah, you can definitely trade these strategies with paper trading if you want. I think even you could trade any strategy without the options approval, I would think maybe, but I'm not 100% sure on that. And Nvidia is still staying above that 232 mark, and shockingly. Yeah, 4,000. Well, I'm hoping to add a fourth income stream with the app that I'm developing, and that should send me over 5, at least, probably 6,000, I would guess. All right, that Nvidia trade is basically break even at this point, so not really making much on me. These 395, 394 puts are basically worthless at this point, so might as well get out of them while I'm ahead, and just in case there's a major shift in the market. It's always good to take profits, especially this early in the morning at 9:40. That gives us all day for SPY to possibly change around. Given that there's no economic news or data coming out, makes it a lot less likely, but I'd rather just get out of the trade now than I'll wait for it. With my consistency, why don't I scale up with my trades? I could scale up with my trades. The problem with scaling up, I feel like, is that I get a little bit too cocky with my trades once I put on a lot of size to them. So I might hold the option for longer than I should, and it's just kind of harder to say like when to cut my losses versus keeping the trade smaller. Like if I went from doing $300 a trade to $500 a trade, you know, my average loss would be going from $74 right now to, let's see, 5 over 3, like $125. So psychologically, that would be a little bit harsher on me than losing, you know, on average $75 a trade. What is the Discord channel about? Let me type this in right quick. And Discord channel, I mean, you can go to the free one, and you just get to talk with a bunch of different traders there. Of course, myself, I'm always monitoring the chat. And then the premium Discord, that comes with trade alerts, Q&As if you want to ask me questions about different option strategies. Currently working on some playlists to help out like brand new people to options trading. Basically curating a playlist. I wouldn't call it a course, but kind of similar to it, to where you're starting with the basics and then working your way up. Let me post this in the trade alerts right quick, and then we'll talk about that. That is not the right screenshot. All right. What is the thought process when you make a prediction? Let's see. Closing options alerts. Premium just took profits on the SPY put credit spread expiring today, 223 at 3 cents each. Strike prices I chose, 394, 395. I'd say the odds of going back to 395 are still stupid low, but don't want to take any chances here. The Nvidia trade currently down by 16. Just seems to be catching a bid at that risk range right here. Wish I could see the options flow and see if people are taking profits on the 220 calls that everybody had bought up with the highest open interest, but don't really have that data available to me. But yeah, the Discord channel, the free one, you can just contact me anytime you'd like. You can talk with the 4,000 members that we have in there, and then the premium Discord comes with the spreadsheet that I use to track all of my options, which I need to log that one. And then the Nvidia trade right quick, 0.03, so $54 of profit there. New trade with the Nvidia put debit, which is the bearish strategy, expiring 2/24. Probably should have extended my expiration date to next week, but did not. And then strike prices were 232.5 for the long, 230 for the short. Just one of them for 125 debits, and haven't closed that trade. The old Nvidia trade, if I can find it, not here. I think I opened it yesterday right before close. Okay, so let me put that in one row below. 223 Nvidia call credit, which is a bearish to neutral strategy, expiring today. 224. Strike prices I chose were 212.50 for the long, 210 for the short. Quantity just one of them, and I got $1 credit. Probably going to take max loss, close them at 250, so that would be a 150 on the loss. So that puts me down about $100 today. But we got the Nvidia trade going on still, so maybe that could make up for it if Nvidia does pull back between now and tomorrow. How do I get in contact with you? Best way is going to be through the Discord. Just tag me in the chat and I'll get back to you. What's your thought process on making a prediction that you know you're right, however you're red happened to be yesterday and sold too early? I guess that's kind of hard to say. Like with this Nvidia trade that I opened up, I'm still pretty certain that I'm right, considering that it's trading above the upper risk range. The problem is that SPY is trading at 402, right? So you have to have kind of a balanced approach to it. So if SPY just continues to perpetuate up today, say if it goes up maybe 1% or like 1.25%, then I'm probably going to have to take this Nvidia loss. It's kind of hard to say, like, when you're right, but you're still, bag holding the trade. For the most part, I try to cut my losses short as possible. This is a $45 loss so far. The problem, I guess, with both SPY going up and the triple beat makes us a little bit less likely to come below the 232 mark, so it might even be worth just closing out of it now, taking the $40 L. Currently it's at 70 RSI, so even on the technicals, not looking great. But, considering it only needs to drop $5 from 235 right now, that's only like 2% drop, which wouldn't be a terrible lot, especially considering that's below the risk range. So for me, I think it's worth holding, but on the contingency of SPY continuing to go up, I might have to close. The dollar index is down, the 10-year is down, the VIX is down, so basically everything is pointing to the upside for SPY today. Could even open a bullish trade to hedge. That's also another way that you can kind of mitigate your losses, is by hedging your positions. So since I'm bearish on Nvidia, I could take a QQQ bullish trade. and those will kind of be a counterbalance against one another, because Nvidia is leading QQQ at the moment. QQQ is currently up by 1%. Maybe it could go up 1.5%, which would be another $1.50 or so. Currently trading at $297.50, so that would put it at $299. You got that $299.23 resistance level. Not sure if we'll reach that by the end of the day. It's possible, considering that GDP came in lower than expected, which is bullish for the markets. With the Nvidia earnings coming in better than expected, also bullish. So I could see us probably going up another 0.5%. Sorry, my back itches. To $299. Let's see how much that trade cost. Why wouldn't I go long Nvidia for the hedge? Well, I'm already short on Nvidia, so going long on Nvidia would just, I guess it would be market neutral. But I always hedge with different stocks, sometimes different expiration dates. I would set the expiration date for tomorrow for the QQQ trade. The problem with that is the core PCE coming in tomorrow, so I might even put a hedge on a hedge on a hedge, assuming that the markets will crash tomorrow with the core PCE coming in higher than expected, which would send the markets down. So let's see, 298 is seeming pretty good for the long side on QQQ. It's going for 51 cents currently, so you got a 1-to-1 risk-reward ratio. It's a little bit too expensive for my taste. Usually I try to open these at like 30 to 40 cents. So let's go one strike price higher, assuming that it'll reach 299. That's 40 cents for that. That's even too expensive for me. If it was trading at 298, I would pay 40 cents for it, but since it's trading at 297.50, not worth it. Thoughts on Rivian earnings later today. Rivian, think they're going to have a pretty tough earnings just because of the rising interest rates, because of how expensive their trucks are. It's going to dampen the demand for their vehicles. The revenue is expected to come in much higher than it has been, both last quarter and especially over the last year. So given that, I think that Rivian is probably going to miss, especially on the revenue. Earnings, I would probably still expect to miss. It's already down by 3% today and basically trading at the 52-week lows. So there might not be a lot of opportunity to the downside. So for me, if I were to take a trade on this, I would probably do maybe a call credit spread. The expected move for this week is 95 cents in either direction, so basically $1. So assuming this would be probably below 19 or 19.50 with a call credit spread would be the trade that I would take on it. Wouldn't go too deep on it. Usually with earnings, I only spend like $200. So don't gamble your life savings on it. But if you can get a decent credit, assuming that it'll be below 19.50, I'd say that would be a pretty good trade. Completely lost the Discord. It's hard to use. Check out the Discord guide. That'll give you all the different chat rooms that we have available and what they're used for. So on the Start Here page, once you've verified yourself with the CAPTCHA, go to the Discord guide, and that'll tell you what each chat room is used for. Do I think PCE will come in lower than forecasted? Let's check what the forecast is. That's important to note. Economic calendar from investing.com. Tomorrow is the release date, coming in at 0.4% for core PCE for the month of January. Previous was 0.3%. I think that it's going to come in higher than the month-over-month reading. The year-over-year reading, it might come in slightly lower. The expected is 4.3. This might come in at like 4.2, but I think that the month-over-month reading would be 0.5 instead of 0.4. So month-over-month reading probably higher than expected. Year-over-year reading probably lower than expected. I think more people are going to pay attention to the month-over-month reading due to the disinflation narrative. If you compare this to, say, CPI, which came out last week, let's check it. We could compare it to core CPI. Core CPI went up also 0.4% actually, so maybe it is going to come into expectations. I'm not really sure what the difference between CPI and PCE is, and like what the exact like measurements are, how they weight it. So it might come in at expectations or slightly higher in my opinion. So either 0.4 or 0.5 would be my guess for core PCE. So it comes in at expectations. That also kind of destroys the disinflation narrative, which would be negative for the market. Still, I don't think that it's going to see as heavy of a sell-off if it were to come in higher than expectations at 0.5. If it comes in at expectations, I think SPY would probably manage its way back down to the $400 level. And then if it comes in higher than expectations, I think we could probably go back down to that $397 price level that I've got drawn up. That would be my guess. So 400 base case, 397 worst case. How about a call credit spread for Nvidia? Expiring next FOMC meeting. That might not be a bad idea either. I would probably extend that expiration date. Just give it a little bit more time to rationalize. Nvidia is trading at 237 right now. SPY is up 0.9%. QQQ is managing up to 298, so that's 299 call debit spread that I wanted. Currently going for 45 now. When I cut, I got it for 40, so that's a little bit disappointing. We are testing the highs. If today is going to be a trend day, we are above 50 RSI. So maybe we can wait on a pullback to that 50 RSI mark and then take the bullish trade. How did I learn my option strategies? Just a shit ton of practice. So I initially learned them here on YouTube through like In the Money, through Tasty Trades, and the Trading Fraternity. Those were the three main people that I learned from in the beginning. And then once I learned the strategies, I just started to implement them myself, figure out different ways to trade around. I'm a big trader around like big events, earnings reports, and economic data. That's just the way that I've, kind of figured out how to trade. Everybody has a different trading style. But, yeah, just a shit ton of practice, trading every single day. Usually I make like 2-3 trades a day. So just building that practice up, and that will get you where you want to be, hopefully. All right, we're right at 50 RSI, 53. Might be able to snag these at 40 cents, 41 cents or so a piece. Not going to spend a lot on it. Probably like 200 The bid just moved up, or the ask just moved up on me. 55, or sorry, 45. So as long as we stay above 50 on the RSI, I'm probably going to hold this one. But throw that one in there. New options alert. This is a day trade. Premium. Just opened a new QQQ call debit spread that expires today to 23 expiration at 45 each. I probably overpaid for them. Usually do with Robinhood, unfortunately, but 299, 298. Okay. So basically this is going to be the hedge against my bearish position that I have for Nvidia, currently trading at 238, up 15% today. So absolutely huge rally that you're getting out of Nvidia. So if that leads the rest of the market to go up, you're going to see a rise in QQQ. And if you continue to see a suppression of the VIX, the 10-year treasury rates, and the dollar, fundamentally we are going to continue to go up. All right. Keep an eye on QQQ with the RSI. Don't want to see this dip in probably below 45. If it does, then probably going to have to exit that at a loss. Could be a lower low or a lower high formation right here. All right, going back to that one, the QQQ, currently down by 45. So yeah, I definitely overpaid for it at 45 each. Now they're going for 39, so I probably could have waited to snag them up at like 42. And now we're dipping to 46 on the RSI. So this trade doesn't seem too promising anymore. Yeah. Looks like I'm going to have to take the L. Now they're going for 30 each. Jesus Christ, they dumped like hell. All right. I'll pile on a SPY call credit spread for tomorrow's expiration date with the PCE coming in case the markets continue to fall right now. And that'll be all the trades that I make probably for today. So core PCE released tomorrow. Expectations is positive 0.4% month over month. And that trade is paying up to 35 cents credit. That's a good credit for me. And that one, yeah, I'd probably be willing to put up 250. 34. All right. Got in that trade too. New options alert. Premium. Just opened a new SPY call credit spread expiring tomorrow, which is the 24th at 34 each. All right. Strike prices 303, 304. Or sorry, 403, 404. I was thinking of Qs. Trading at 300 basically. Looks like Q is pulling back down to 44 RSI. So gonna have to take the L maybe for that trade unless we do get a quick bounce. Probably say 297 would be positive and we could be going back up, but right now 43 RSI below 297, so looking pretty bearish at the moment. Call debit spreads are usually never my friend. I opened 5 of them for 45, so I spent 5, 45, 225 on the trade. Probably should reduce that to like 150 next time, but let's get out. Take the L. All right. So I got out at 28. Flagged as a pattern day trader. Not surprised there. 4 trades in 5 trading days. Surprised it's not more, but okay. Trade alerts. Yeah, definitely headed down now. But we got the QQQ trade and the call credit spread now. So that will manage those losses to some degree. Yeah, the lesson here, don't put so much on a debit spread. Especially whenever the VIX is below 25. Closing options alert. Premium. Just cut losses on the QQQ. Call debit spread expiring tomorrow, 2/20. Or no, it expires today. 2/23 at 28 each. Strike prices were 303. Or no. God dang it. 298, 299. All right. Yeah, they're going for 20 cents each, so glad that I got out at 28. Definitely dumping the account. But Nvidia pulling back a little bit with the QQQ falling. Yeah, got flagged as a pattern day trader. Not really too surprised. Since my account's over 25, don't really need to worry about that. But do need to worry about these losses that I took this morning. QQQ. Put debit spread, or that was a call debit spread, which is a bullish strategy. Expiring today. Strike prices I chose were 298, 299. Opened 5 of them at 20, nope, 45, 28. So that one ended up being an $85 loss. Could have been 240 if I'd held, and QQQ stayed below 298, the strike price that I chose for the long. But we got the SPY trade, assuming that it'll be below 403. That one currently, let me actually type that in right quick so I don't forget it later on. SPY, call credit, which is a bearish neutral strategy, expiring tomorrow, 2/24. Strike prices were 304, 303. I opened, let's see how many. Oh, jeez. My mouse is not reacting right. 403, 404. 4 of them at 34. But yeah, if you look at the stats that I got, I think pretty much all my debit spreads are losing me money, down 250 total for debit spreads. Win rate 52%, and usually the losses for debit spreads are larger. I should probably add that metric to this. That would probably be pretty important to note. But going forward, I think probably reducing risk on debit spreads to like 150 or 100 would probably be the move. Yeah, the big moves definitely happen in the after hours. That's been the most frustrating part. But if you're right on the after hour move, that's where you can really capitalize on it. Like I opened that 395 put credit spread, assuming that it would be above 395. I opened those at 21 cents a piece, and then I closed them at 3 cents a piece since SPY was trading at 401 this morning. Right? So if you can guess the direction overnight correctly, hard to do, but if you do, but then you make profit. That's why I always prefer to do credit spreads too. Like that way you can have two directions instead of one direction. If the markets do trade flat overnight, then you can still make profits on that just because of the time decay. But yeah, definitely seeing a lot more moves overnight than you are during the day. During the day, it just seems like a lot of chop. And then after hours, you'll get a definitive move up or down. What's the outlook for today? I'm feeling slightly bullish. So if I had to put a number on it, I would probably say cap today 40150 or so would be my guess. The reason why I'm still feeling bullish, though, is because of the GDP report coming in lower than expected at 2.7% growth quarter over quarter versus 2.9% expected. So that means that the economy is slowing down, which means that the Fed can slow down their interest rate hikes and possibly pause towards the end of the year. And the 10-year Treasury rate reflected that, currently trading at 3.91 versus a close yesterday at 3.92. So with the Treasury yields going down, that means that stocks can go up. But now we might be seeing a rebound in the Treasury yields, bottoming at 3.9. So it might just be in that range of 3.9 to 3.98 for a while. All right. That Nvidia trade not really making its way back, even with the markets pulling back the way that they are. Surprised people still aren't taking profits on Nvidia with their calls, with it trading at 237 and the market's pulling back at the moment. I would think that it wouldn't be long before they start taking profits, but who knows here. Yeah, most people are looking to sell right at the open. Didn't really happen for Nvidia. People still think that Nvidia is going to rocket up, even though their earnings is down over the last year. Earnings and revenue, which means that the multiple went up like 20% since it's trading at the same price that it was last year. If you look at the fundamental analysis on Nvidia, I'm not sure if they have the updated numbers in the Analyze tab. This is the 2-year, 10-year spread, though. Currently at negative 0.73. Last time we saw it, this negative was... Oh, wait, no, it's probably down further. I can't really tell. Oh, the value, negative 0.69. The last time we saw it down there was back in the 1980s. So this is usually a recession indicator if this goes negative. And this is the deepest negative that we've seen ever since the 1980s during, the hyperinflation that we saw back then. So not exactly a great sign for the long term, but in the short term, stocks can get disconnected from reality, as we see with Nvidia trading at higher multiples than it was last year. thoughts for TSM. TSM, let's see. Trading up with Nvidia, not really too surprising, up 5% from 86 at the lows yesterday to 91. Topped all the way at 92. And if we look at, say, the 1 year chart, this one's trading about average compared to the rest of the chip makers, about 10% higher than its 90-day moving average line. So not really high value, not really low value. The problem, I think, with TSM, being a Taiwan-based company, and that really goes for all the chip makers. They're all based in a lot of the chip making process is based in Taiwan. But that does pose a risk if China decides to, try to take over Taiwan. I would say that it probably poses a greater risk to TSM versus, say, Intel, who's looking to create some factories here in the United States. In Nevada, of all places, I think that's a stupid place to put a chip-making factory that uses a shit ton of water, but it is what it is. At least they're diversifying their supply chain. But with TSM, I think that poses more risk to it than something like Intel. Considering that it's trading 10% above the 90-day moving average, I think this could probably come back to like 80, 89 over the next few weeks. Really depends on the data that comes out too and how SPY trades. Like, stocks don't just trade in a bubble by themselves. They just trade with the rest of the market. So if you see Nvidia continuing to go up, that's going to send TSM up. If you see SPY and QQQ continuing to go up, that's going to make Nvidia go up, which means that TSM is going to go up, and it all kind of plays in together with each other. Never heard of Vodafone. Price analysis wise, below the 90-day moving average. The last earnings per share was, it doesn't say what their last earnings was. They do pay a dividend of 45 cents, so that's pretty damn high for a dividend yield. They've only paid 2 dividends this year. Looks like they pay out twice a year. It's been 52 cents, 50 cents, 27, 45. You could say an average of like 40 cents. Currently trading at $12. That would be 80 cents a year. Over $12, you're getting about a 6% dividend yield. It's not bad. I would just like to see the profitability of the company if they can afford to give out that high of a dividend of 8% a year. Obviously, it's declining in value from $30 5 years ago to $12. Not really sure what the company does. Let's see, Vodafone, broadcasting, leading technology communications company, Europe, Africa, keeping society connected and building a digital future. So basically, the AT&T of Europe and Africa, I guess, is what they're trying to sell themselves as. Let's see what their profitability is, though. Vodafone investor relations. Q3 trading update. What the hell is a trading update? I really want to know what a trading update is. That's weird. Never seen a company report a trading update. Why do I have to download this? Why don't you just post it? What? Why is this a calendar event? Oh, this is annoying as hell. Okay, past events. They don't even have the links here. This is annoying as hell. Poorly outlined investor page. Latest annual report. Adjusted free cash flow, 5.4 billion euros. So that's good that they have positive free cash flow. That's what you want to see in a company. $5.4 billion is pretty significant. I wish that they would have a regular earnings report instead of this special. I hate this. There we go. No, I don't want the Q&A. I just want the spreadsheet. Lastly, how about Amazon? Bearish. I'd say that Amazon has less earnings power just because less people are buying goods, and if they are, they're not buying as many just because of inflation eating into their buying power. So Amazon, I'd be pretty bearish on, especially considering that their net income for 2023 is expected to come in at just $4 billion. It's a $1 trillion company. So that means that they're trading at a forward price to earnings ratio of 250. So yes, I would say Amazon would be bearish for this year. Okay. This is a trading update. I just wish that they would show like a regular earnings. Not finding that. All right, let's go to the Analyze tab. See if we can find that here. Risk profile, think back, fundamentals. That's what we need. Vodafone, BOD. Earnings per share, 73 cents annually. So that means that they're trading at a valuation of 12 over 73, 16 price to earnings ratio. Their earnings has gone from 198 back in 2018. They lost a shit ton of money in 2019, negative 192, and then they've been building that earnings back up. They were paying dividends even when they were losing money. That's a stupid thing to do, but okay. Valuations. I'd like to see how much cash balance they have left, but their cash flow per year is, let's see, I'm assuming this is in millions, but I'm not 100% sure. $6 million, maybe $6 billion. I wish that this was more clear. But yeah, price to earnings ratio 16. I think that's a bit high for a phone service company. They could have that kind of growth ahead of them, but I'd probably want to get this at like 10 price to earnings. So I think that probably buying it at like $8 to $10 would be a better deal. Would you try trading solely based on price action and support or resistance for a week as compared to using indicators? I don't use indicators too much. Like the only indicators I use are the very simple ones. RSI, MACD. I don't even use MACD for the most part. And the only reason why I use RSI is because it tells me if a stock is bullish or bearish, right? So if we're looking at SPY right now on the yearly chart, it's trading at 51 RSI. So since it's above 50, that is slightly bullish. Oh, sorry, this is the weekly chart. So on a weekly basis, this is slightly bullish. And if this goes below 50, that would be the start to bearish price action for the weekly chart. If we're looking at the 1 year, 1 day chart, shorter time frame, this is below 50. It could end up rebounding back to 50, and if it trades around 50, that would be neutral. So say we go back to 50 RSI, we just trade around that, we'd probably be in a range of like 399 to I don't know, like 403 or something like that. So if we continue to trade flat, we'd be at 50 RSI, 399 to 403. If we're bearish, if we continue to be bearish, we would crack the lows of 397. And then if we manage to somehow go back to being bullish, you might see a break of that 403 mark, maybe heading up to like 407 just based on the last gap in the chart. When looking at RSI, do I set it for the day, week, or month? It depends on what analysis I'm looking at. Like if I'm looking at a longer time frame, that's going to be, like maybe a 1 week trade, maybe a 2 week trade, even 3 weeks. Whereas if I'm looking just at like a 2-day 5-minute chart, that's going to be a day trade. And then if I'm looking at, say, the hourly chart, that might be like a 2-3 day trade. So with SPY currently trading at 56 over the next few days, I would be bullish, but you also have to balance that out with any upcoming events, like the core PCE coming in tomorrow. If core PCE comes in worse than expected, you're going to see this go back into bearish, which it's been in for the last few days since the 17th. So basically since the start of this week. All right. SPY currently trading at 401 and some change. So if we go to the 2-day 5 minutes, this one still slightly bullish, catching a bid right around 45 RSI. So if it does continue to hold 50 on the RSI, that would be bullish for a day trade. Then if we're going back to QQQ, this one's trading at 41 on the RSI, so still in bearish territory. And as long as this continues to trade below 50 RSI, that would be a bearish trade to take on. The cyan, not really sure how to say that color, but this is the 90 moving average. I was just using it for, the Nvidia trade that I took on. The reason why I took on that Nvidia trade was because of this 90-day moving average. And it's trading right now 237 versus a 90-day moving average of 163. So that's 237 over 163. That means that it's trading 45% above what it's been trading over the last 90 days or last quarter, basically. So this is a quarterly report, an earnings report. And if you compare this to other stocks in the same industry, so the semiconductor industry, SOXX, which is a semiconductor ETF, is trading 412 divided by 374. This is only trading 10% above its 90-day moving average. So that means that there's a 35% discrepancy between where Nvidia is trading right now and where the rest of the chipmaker industry is trading. So to me, considering that their growth is slowing down, that means that they could fall, that 35% in order to match the rest of the semiconductor industry. But obviously right now, Nvidia is perpetuating up, so might not be the best trade to take on at the moment. But yeah, for the most part, I don't use the 90-day moving average unless I'm looking for something very specific like that. Walmart, am I still holding that option? I think yeah, I am still holding the Walmart option. Walmart's currently trading at 142 and some change, 142.64, so it's below the mark that I needed it. So we head to that trade. 144, 145 strike prices. So my assumption was that it would be above 145 after the earnings. That one currently down 180. So let's see. That one probably going to have to get out of at a loss. When did I realize I wanted to trade full time? I mean, I started trading full time back in March of 2020. I've always, had a taste for trading, I guess, since 2016. Never really got serious until I ended up quitting my job at a call center. I got miserable at that job. Basically, use all of my time there, even during my calls, to fill out applications for being a software developer. Never ended up getting that because job market was super tight back then, back in 2020. And then, COVID hit, so chances of getting a tech job plummeted. So I'm like, you know what? Just going to quit, take on trading full time. And that's what I've been doing basically ever since, with the YouTube channel, of course. The Discord also bringing in some extra income. But yeah, this Walmart trade's a little bit concerning. It was trading at 144.50 this morning. Could have maybe sold the 142.50 put instead of the 145. I'm honestly really shocked because their earnings came in better than expected. Revenue came in better than expected. So I still feel like I'm right on the trade, and it is just trading in that range of 142 to 144. We could hold it as a hedge for tomorrow's bearish trade, but kind of hard to say. Is this chart on Thinkorswim? Yes. Thinkorswim is what I use for my charting, and then Robinhood I use to execute my trades. Wouldn't recommend executing your trade outs on Robinhood because you are going to get the worst prices possible. But that's what I've been using for 3 years at this point, and still continue to use it. Hopefully going to switch away from it to Aries in the next couple of weeks, or probably next couple of months, just because I'm waiting on some more income to put into the account. I need to bring the account to like $3,000. So I have like 1,000 in there right now, so I need to deposit 2,000. So once the extra income comes in from the app, probably going to switch over to that. Why do I not use TradingView? Because I'm not going to pay $30 a month to look at charts. I think that's a bit ridiculous when I can do it completely free with Thinkorswim. Why pay for something when you can get it for free? Let's see, 237 for Nvidia. So still just hanging around that 237, 238 mark. Not really seeing much change at all. I am happy with the risk that I put on for the Nvidia put debit spread, though. I only put on 125, so I think I'm just going to keep holding that for tomorrow's expiration, seeing how that trade shakes out with the PCE coming in. That would probably be a catalyst for the downside for QQQ, which would bring down Nvidia, which would make this trade profitable. Yeah, Yahoo Finance, or I don't know if Yahoo Finance has the customizability that Thinkorswim has. I haven't dived deep into Yahoo Finance charts, but I think Thinkorswim probably has some of the best charts to offer for free. So damn. Yeah, that put credit spread for Nvidia is, or Walmart's really crushing me. The 403, 404 call credit spread for SPY up a whopping $1. Not sure how I'm up $1 when I opened 4 spreads, but I'll take it. Still think SPY is going to be below 403 with the core PCE coming in tomorrow. Currently trading at 401. So if you do see, a 0.5% move, that could place us in a little bit of danger here. But considering we're already trading up 0.6%, I don't think we're going to go up more than 0.75% today. Unless the trend says otherwise. So if we stay above 50 RSI, then we're probably just going to trend up for the rest of the day. Currently trading at 50 RSI, so you might just get a decent iron condor opportunity, assuming that we're going to stay maybe above 399, below 403. If you can get a decent credit out of that, that might be a decent trade to take on. We're about 1 hour into the market, so the credits for those probably going to wind down, I would think. We're only $2 away from the $3.99 mark, and that's paying 18 cents. And then for the 403 mark, that's $2 away too. So you're assuming like a $4 range, which is pretty tight. 0.5% in either direction is doable. You're getting paid 35 cents in credit for that trade. That's not bad. I don't know. I feel more worried about the 3.99 strike price than I do about the 403. But we're just trading flat at 50 RSI, so really undecided price action at the moment. I think it's going to be worth it, though. All right. So let me try to open this iron condor. Couldn't get it for 35. Might have to get it for 34. No, the bid just moved up again. Okay. Any tips for a small account trader? Only have 40 in the Robinhood. No, it's not much to trade. Need smaller options to buy like $4 or $5 options. It's pretty hard to do that unless you're trading like penny stocks, which, those can be pretty dangerous. You can always look for like stock screeners like Finviz, sort by stocks for under $5. And those options are going to be a lot cheaper than, something like Nvidia. Even with debit spreads, credit spreads, you're going to be paying like 50 cents at least, or $50. So if you want to keep it really small, I would keep it to probably stocks under $5, penny stocks basically, which also amplifies the risk. So it is kind of a give or take. I would say saving up your cash as much as possible would probably be the best bet. And you can always like paper trade in the meantime if you can't afford to put in actual cash. Jesus Christ, I cannot get filled for the life of me on this iron condor. Every time I try to put in the price for 35, the bid goes to 36, but I'm still not getting filled. Right now I'm looking at Thinkorswim. Finviz, you might be thinking of https finviz.com. Go to their stock screener, and that'll give you stocks for whatever criteria you're looking for. So if you want stocks that are under $5, if you want to look at mega cap companies under $5, you can do that. Not even getting filled at 34 for this option. This is annoying as hell. Yeah, penny stocks I feel like aren't really worth it, honestly, just because of how volatile they are. Jesus Christ. Why can I not get filled on this order? Please. All right. Finally got filled at 33, which is below the bid price, but okay, Robinhood. Day trade. Premium. Just opened a new SPY Iron Condor expiring today. 223 expiration at 33 each. Strike prices, assuming between 399 and 403 top. Isn't the safest strategy to use the wheel strategy on established stocks? Well, it was during a bull market whenever stocks perpetuated up, but during a bear market, if you're selling puts, you risk the stock going down. So say you did a put credit spread on the stock like Tesla whenever it was trading at above $300. Right now, you'd be down on that by about 30%, right? So the risk on selling puts and selling calls is that you have to hold 100 shares of the stock, and if that share does drop in, or if the stock does drop in value, then you lose money on it. So say you opened a put credit or sold a put option when it was trading around 260, assuming that it would catch support. Then you had the gap down, went all the way to 210 very quickly. So that is the risk whenever it comes to selling puts, selling calls, and the wheel strategy. And also very capital intensive, right? You need $20,000 to sell put options on Tesla. So I would rather save my cash than sell puts and calls, personally. Yeah, I would agree with that. Heard most people came to realize may or not may work, but you have to change your strategy depending on market data and sentiment. Absolutely. You can't just stick with one strategy and expect it to work forever. Like, I was making a shit ton of money doing, the wheel strategy and leaps options during 2021 and 2020. Well, the later part of 2020, obviously. But then in 2022, I realized that it really wasn't worth it anymore. I was still running the wheel strategy on AMD when it was trading for around the same price that it is now, around $80. I think I ended up buying it at like 90 or 95. I brought my cost down to roughly $80 by selling cash secure puts, cover calls, getting that income. And I ended up getting assigned to sell it at around $80 too. So I ended up breaking even on that trade. So that was the point that I realized probably not worth it to run the wheel strategy anymore, considering that you need, $8,000 of cash for AMD trading at $80 right now. I'd rather save that $8,000, either put it in a high yield, get that, 4% interest that they're paying right now, or, put it to better use. Developing the app that I am could have a much better return than, getting the 2-3% a month that you're going to get from wheeling AMD. Can I give a basic put or call option example? Yeah. Let's see. So let's say that I think that Nvidia is going to make its way back down to 230. Let's say $232. Let's not even go down to 230. Nvidia is going to be an expensive stock to buy put options on, just because of it being a $200 stock. But if my assumption is that it's going to come down to $232 by, say, tomorrow, I would want to find a put option that has a break even of 232 or higher. So if I bought this 240 put option, it's going for 580. So you subtract 240 minus 5.8 for a break even of 234. So if I'm right, if Nvidia comes back down to 232, then I make $200 of profit at the end of this trade on the expiration date at 4 p.m. On February 24th. This trade is going for $575. I feel like that's pretty expensive. So my preference for that trade instead would be to do a put debit spread where I would buy the 235, sell the 232.5. That way I'm only paying $100 versus paying $500. Yeah, I mean, if you choose the right stock, you can run the wheel strategy. There's always a bull market somewhere, right? Coca-Cola, McDonald's, let's see, Walmart. These are all good all have been good stocks to run the wheel strategy on for 2022. But if you're looking at, the traditional stocks that everybody's been investing in, say Nvidia, this is down from 300, Tesla down from 400 almost, Apple down from 180. So, I mean, if you're using the old stocks that were doing well in 2020, 2021, expecting those to continue to go up, wouldn't be a great strategy. But if you can pick the right stocks, there's always a bull market somewhere. The put debit spread. So basically, you're just buying one option and selling an option against it. So it's two separate options. The option that you sell is a strike price that you would assume that it would be below with a put debit spread. And then if it's a call debit spread, say if I thought that Nvidia would be above 240, I would do a call debit spread. I would buy the one that's below the 240 strike price, sell the 240 that I think it's going to be above. That one I'm also paying $100 in order to open, for the potential of making $150 or the difference between the strike prices, which is $2.50 minus the cost of roughly $100 for a max profit of $150, potential of losing $100. Do I think that 2-day expirations, 15-minute chart, or the 1-hour chart? I use the 1-hour chart. I don't use the 15-minute chart at all. So for me personally, I would go with the 1-hour. Damn, Apple is pulling back from 150. Got rejected at that 150 resistance again. Let's see. The VIX is still trading low. 10-year is at 3.92, basically neutral. The dollar is actually making its way back up. That could be what's causing the markets to pull back at the moment. SPY is currently trading at 3.99, so going bearish. Let's see. Looking at the 2-day 5-minute, trading at 30 on the RSI. So that's probably just a reaction to the dollar going up at the highs of this morning. So if that continues to perpetuate up, say if it goes to 104.70, that's going to be bearish for the market. All right, that 403 for a 4-call credit spread is losing its value pretty quickly, which is good. The iron condor is gaining value, which works against us, unfortunately. They're trading for 50 cents each now. That's surprising that they're trading so high. Let's see. The iron condor that I opened assumes that it's going to stay above 3.99. Now we're tagging that 3.99 mark. Still feel bullish to neutral, but with the dollar pushing the highs, it does kind of worry me here. IWM is making its way back to the negatives. The Dow is negative. How is the Dow negative today? That's wild. Dow is leading the way down. Interesting enough. You would think with the rising dollar, rising interest rates, that people would favor the Dow, but people are favoring QQQ today, trading at 294. Nvidia is finally making its way back down, 235. Hopefully it comes back down to the 230 level. And we can take some profits there, but yeah, SPY is making its way back down to 399, a little bit below it. Let's run a poll right quick, see what y'all think. Where will SPY close today? And I'll put above 400 and below 400. So what are y'all thinking for today? Above 400 for the day, currently trading at 399, or do you think it's going to make its way back up to over 400? Got a 50-50 split. Favoring 71% are saying under 400. Yeah, the RSI doesn't look too promising at 30 right now. What did we close at yesterday? That's an important price level to look for. 398.58. So watch for that as a potential support level. 399.58. We didn't quite get there. Wait, hold on. Close at 398.58. Yeah. So we didn't quite get there. But we are trading pretty close to it right now at 399.08. Think that the dollar index is going to take profits. Yeah. That's definitely a possibility. I want to check in on the FOMC countdown tool. This is actually rising. So the odds of 50 basis points went from 24% this morning to 27%. So that's probably why you're seeing a rise in the dollar index. And for treasury rates, a little bit, with the 10-year trading at 3.92 versus that 3.9 bottom. So treasury yields trading in that range. The dollar index might be breaking the range to the upside. If the dollar goes up, I would think that the yields would go up, but not always the case. Sometimes you'll see the dollar go up and the yields flat, like we saw, I think, the other day, like 2 days ago. Got 52% people saying that we're going to be under 400 and 48% saying that we're going to be above. So about a 50-50 split that we got right now based on 23 votes. Not a lot of people voting. All right, more people voting now, 58% with 24 votes under 400. Do you trade on Robinhood to avoid fees and commissions? That's part of it. If you're trading spread options, then you're going to be charged for each option that you open. So if you're buying an option, selling an option, and your fee is 65 cents, that means that you're going to pay $1.30 for a regular credit spread and then $2.60 for an iron condor. So yeah, that can start to eat into your profits. And I mean, if you're going to be paying in order to open your options, if you're going to pay a commission of 65 cents, then you better get a good deal, right? The best deals that I've found are with E-Trade, just based on my Discord and the people that trade with me. The people that trade with E-Trade usually are the ones that get the best fill and the fastest fill. And then if you don't want the commissions, if you don't want to have to pay commissions, then I would say the best trade or the best trading app would probably be Aries. So that one, they don't charge you any commissions. They have way tighter bid-ask spreads than what you'll get from Robinhood. So if we're looking at this 399 403 Iron Condor for SPY, the bid-ask is 46.50. Whereas if we go over to Trade Aries, and let's see, SPY. Expiration date was for today. The puts that I chose were 399, 398. Whoops, wrong order. 399, 398. And then the calls that I sold were 403 and 404. So if we order this, the bid-ask spread is 49.49, whereas Robinhood is quoting me for 46.50. Right? So the bid-ask spread is always going to be a lot tighter here than what you'll get on Robinhood, which means that you're probably going to get a better fill price than you will with Robinhood. Let's see what the dollar looks like. The dollar topped out again. Could be a double, triple top. And for the day, currently trading at 60 RSI, so if it is bullish, it's going to stay above 50. Might crack that new high. But right now we're seeing a pullback in the dollar, which is probably going to have a knee-jerk reaction with SPY going up. Let's see. How much emphasis should we put on max pain and options? I wouldn't say you should put a lot of emphasis on max pain unless it's the third week expiration date. So on the third Friday of each month, you have the monthly option, and that option is always going to have the most amount of open interest just because there's more people buying monthly options versus weekly and daily options. So if you're going to be paying attention to max pain, pay attention to it on the third Friday of each month rather than just like on a daily basis. Like if I look at max pain for today for SPY, 223 expiration, the max pain is at 399. Currently we're trading at 399. So that does make it more likely that we're going to be at the max pain for today. But there's not that much open interest compared to, say, a weekly expiration and especially a monthly expiration. The open interest for the 399, let's see if I can find it. Is, I think this is the open interest. OI, yeah. 6,800 and 5,800, so a total of 12,600 options expiring at the 399 strike price. But if you look at tomorrow's expiration, the maximum pain point is 402. And the open interest here is 18,800 and then 20,000. So you're seeing 20,000 of open interest compared to 8,000. So a lot more people are going to be paying attention to tomorrow's expiration compared to this expiration, which means that the max pain would be more important tomorrow than it is today. And then for the monthly option, which would be the 317 expiration, I think. 317 March expiration. The max pain is 401. So if we go to the open interest here, you're seeing 401, 15,000 plus 15,000, so 30,000 in open interest compared to 20,000 open interest. So monthly option is always going to have the greatest open interest. So if you're expecting max pain to be reached, expect it to be on the monthly option and not daily options. Do I think Cisco could have a good run for the wheel strategy? Let's see how it's been trading. Obviously, can't use past performance as an indicator for future results, blah, blah, blah. But, it is trading pretty flat for the last year, starting at 57 at the highs, going down to 39, currently at 49, so basically in the middle of its range. I would say with Cisco, considering that they benefit from food inflation, if that food inflation persists, then that Cisco is in a good place. So I think that running the wheel strategy on Cisco could be a decent idea. Another good stock, I would say Walmart, Coca-Cola, and the staple stocks would probably be the best place to put your money if you do want to use the wheel strategy. But yeah, that's my trading for today. And I will catch y'all tomorrow, Friday, at 9:30 in the morning. See you, everybody.